Joining us now is Tom Lee, Fundstrat Global Advisors co-founder and a CNBC contributor. Tom, it's good to see you. We've had recently, I don't know what you'd call it with technology, but at least some of the bloom has come off the rose on the Magnificent Seven, or at least a couple of them, and on technology in general, although the NASDAQ has recently hit some new highs. Do you see any trouble there, or at least a moderation of the gains from recent years?
Well, I think it's understandable that technology could be consolidating some of the gains, because the gains since October have been prodigious. I think it's been healthy because small caps, industrials, other sectors have started to lead. So I think it's a sign that the market is broadening. So I don't think technology valuations are at a bubble. I actually just think it's been healthy.
Really? So that is the half empty, half full viewpoint that either one that we've actually had people express earlier. Either, the generals could come back down to the soldiers, or they could broaden out and the advance could continue. So do you think that this election year, 2024, will gains be similar to 2023, or was that was pretty rare and unlikely to be repeated this year?
It's a question clients are asking us. The stock market seems a lot stronger this year than last year. We've had 4 consecutive months of gains, which Mark Newton, our head of technical strategy, says is very rare. We already had a pretty nice January, a very strong February. To me, if the market gains 20% this year, which would match what it did in 2023, it wouldn't surprise me. But I think the character would be very different, that it would be a lot more sectors participating in. In some ways, I think if we are up 20% this year, I think small caps could be up a lot more, as much as 50%. So
we're not going to have a down year. That you're taking off the table, or what is it that would have to happen to throw this, your somewhat bullish or pretty bullish forecast in jeopardy? What would have to happen?
I think 2 things would probably derail an equity move of 20% this year, something even pushing the markets down. One would be if inflation reasserts itself in a way that the Fed has to reverse its action and become quite hawkish again. I think that would terrify markets. The second is if monetary policy is so restrictive now that we slip into a recession. I don't think we're losing that much economic momentum, but either would be negative for stocks.
Okay, and so it broadens out. Do you have a feel for interest rates? Is that how important is that to you? Because we got a jobs number tomorrow that could move rates and the prospects for cuts later this year. You probably would be more bullish if you could say we're going to have 4 cuts this year, wouldn't you?
Yes. I mean, to me, more cuts would be easier for markets to sort of feel comfortable, because it would also have, as you're pointing out, downward pressure on interest rates. I've been pretty surprised that interest rates have moved up this year, and the stock market has been able to sort of look past that, because I think they're viewing it as rates are rising for the right reasons. But yeah, a better scenario is, of course, inflation's falling visibly enough for the Fed to begin cutting with confidence.
When Bitcoin was 4,000, it came down from 20,000, and you used to come on and say, yeah, by the end of the year, it's going back to 20,000. I don't know how you feel confident doing those things. Now you've done it again, really, and with I don't know, what did you say by the end of next year? Where could it be in your view?
Well, I think that sometime in the next 12, 18 months, Bitcoin can be over 150,000. But that's because, the backdrop for Bitcoin is so much more favorable today. We've got more visible demand from the spot ETF, and we know the supply dynamic is improving with the halving coming up, which is less than a month away. It does help that the Fed is becoming dovish. I mean, that's easier monetary policy. And I think from a regulatory perspective, we had so many hammers dropped in the last 12 months, really 18 months, that unless it's going to be worse over the next 2 years, Bitcoin's already faced sort of the peak of regulatory backlash.
And it got through the old highs. We had a true Bitcoin bull on earlier saying that in previous instances where it has reached a new high that it doubles fairly quickly after that. I mean, he said 18 days. The minute it hit a new high, it sold off almost $10,000 to 59, but it's back to 67 today. How long before it doubles again? I mean, could you see that in the near term, another doubling?
I mean, near term, it's hard to know. Near term, Joe, I know our digital strategist Sean Farrell said that it's typical to consolidate after making a new high. So he thinks for the next 9 or 10 days we're going to be maybe chopping around here, but we saw it with the spot Bitcoin ETF inflows, like, you know, BlackRock seeing almost 800 million in inflows. So I think as long as there's strong spot demand and there aren't eager sellers, you do have a market that's out of balance, that there's too much demand for Bitcoin, not enough supply created through the block reward.
Right. And as a measure of risk on, I guess the NASDAQ sometimes even tracks Bitcoin, doesn't it?
Yes. It's a study we did several years ago showed that the best years for Bitcoin occurred when the S&P and the NASDAQ had their best years. So I think it does sort of confirm the idea that Bitcoin is a risk-on asset today. So as long as Bitcoin does well, it's actually bullish for stocks.
Did you notice the other day the Wall Street Journal, in the headline, it was describing the move in Bitcoin, and it said a new high for the currency. I had never seen that in the Wall Street Journal before. Usually, I don't know what you call it. I still don't know what to call it really. But front page, it said currency. Is it a currency?
Yeah, I mean that's it. I missed that. That's a great term. It's certainly better than someone calling it sardine cans or tulip bubbles. But to me, it's
hey, Tom, so just to put a fine point on this issue about the correlation with the markets, and how do you so if you're saying it's correlated to the markets, and we have a market that's doing quite well, and as we said, it appears the economy is doing quite well. The idea that it would do very well in a bad economy, which is what a lot of people have been trying to suggest, I think, on this broadcast earlier today. Is that right or wrong?
You know, I think Bitcoin is a hedge against unsound money. And that's why when Joe, talked about it as a currency, that's how many people do view it, because, Bitcoin has its own unit value and it's measured against dollars. And I think it's the same way people measure gold against dollars. So I think if there is an event, and we've seen it in Turkey or Venezuela, that when those currencies collapse, Bitcoin has been a way for people to preserve wealth. So I don't want to see that test sort of put in the U.S., but I think that's one reason people own Bitcoin.
All right, so this is going to be the part of the show where I break down some of the stocks that were mentioned in the video. We've got the S&P 500 up about 0.8% today. As you see the lines on the chart, we have the 200-day simple moving average, and then we have the 21-day exponential moving average. We've got the SPY, we've got a huge leg up, then a consolidation, then another huge leg up. I think more likely than not, we're going to be looking for another pullback here soon. The Qs, more or less the same thing. Huge leg up, consolidation, huge leg up. I think it's time for a pullback back down to recent highs. The Russell 2000, it's got a pretty good base here, a nice triple bottom, and it's on its way back up. It's just breaking out of this high, so it's actually looking pretty bullish. Apple's looking pretty rough right now, honestly. They've broken down under the 200-day moving average. They're well under the 21-day moving average. And guys, they are just free falling right now. I actually did pick up some shares yesterday around 170 because Apple's a great long-term buy, but there's no sign, there's no bottom in sight right now. Amazon looking mighty fine. I bought down here at 119. Would you believe that? Look at this epic run it's been on, and it's holding this great trend line that I have right here. When it breaks, that might have a pullback, but until then, that's just been a nice support level. It's been riding it all the way up. We're almost back to recent all-time highs, guys. That is phenomenal. Google has been struggling recently. It came up and reached all-time highs, got pretty hard, massive rejection. Let's see, it's down around 13% from all-time highs. I have it around 130, guys, so it's looking right at my cost basis, but I'm not going to be selling it. It's right at the 200-day moving average, and that's a fantastic time to buy a company like this. Microsoft has just been phenomenal. It's been leg up, consolidate, leg up, consolidate, leg up, consolidation now. So if anything, with how strong this company's been, I wouldn't be surprised to see another leg up. Meta has been astronomical. Look at this run. Besides Nvidia, you probably won't see another stock that's moved like this. From the very bottom all the way down here at what, like $80, it's run 472%, guys. That is just amazing. And look, this is not looking bearish. This is struggling to sell off anywhere, and it's just making higher highs and higher lows, looking actually very bullish. Some people say Meta's even cheap. Nvidia, look at this rocket ship. As we're talking about though, we have a leg up, consolidation, massive leg up. Even though this stock is phenomenal and is blowing all expectations out of the water, they are due for a consolidation, in my opinion. It might be around the whole number of 1,000, just because it's a whole number. People gravitate towards the whole numbers. Tesla has been a dog for the last 2.5, 3 years, guys. Just rejected over and over and over. Lower highs, lower lows, especially this last trend. Put in a high, low, lower high, lower low, lower high, lower low. And now we're at the bottom of this, guys. If we break 173, it's going to be nasty. We could go all the way down to 150s. We could go all the way down to 100. So honestly, with how volatile Tesla is, I'm holding off on it. I have no idea what to do with it. Guys, this stock can go either way. Some good news comes out though, and it can shoot all the way back up. And lastly, they were talking about Bitcoin most. Bitcoin is not on Thinkorswim trading platform, so I had to pull up TradingView here. Look at this astronomical run in the last 1 year. We can go to the 5-year chart. It's just reached over and past all-time highs, guys. That's a pretty good bullish sign. For the most part, they normally don't have 3 major triple tops like this, so it should just be ready to break out and keep running. He's calling for 150,000 in the next 12 months to 18 months, guys. So obviously Tom Lee's pretty bullish on it. I think technically it looks also pretty good, and from the demand side it sounds pretty good. Hope you guys enjoyed the video. If you did, make sure and hit that subscribe button, hit the like button, and don't forget to share it. Thank you guys for watching.